Well, hi, it's Evan Swanson here of Guild Mortgage here for another episode of Real Talk. And I'm super duper excited today to have Diana Colin with us. Diana has been in the real estate industry for 38 years, 37 of those years practicing sales. And in the most recent year, she is no longer an active realtor, but still works by referral. She is now the professional standards manager at the Portland Metropolitan Association of Realtors. Diana, say hello.
Hi there. Thanks, Evan. I'm
Uh,
happy to be here.
Another interesting fact about Diana is that when I was growing up in Southeast Portland, you and I only lived about a mile or two away from each other, and
What?
we didn't know it. You lived in the Reed Heights, near Reed College, correct?
Oh, yeah. Uh-huh.
There you go. I grew up on
Yeah,
37th and Steel, so there you go.
that's right. Yeah, we were very close.
Diana, you take the trophy for guests I've had on Real Talk now as having the most extensive career in real estate. You got in the business in 1986.
Hmm.
You have seen and helped clients buy and sell a lot of homes over those years. Working in the real estate industry all those years, um, what I mean, obviously there's been tons of changes. Would you be willing to point out one or two of the most significant changes over that time? I think more importantly, what hasn't changed? Fundamentally, what is still the same about working in the real estate industry?
Well, a couple of major changes. I mean, the first one I can think of is the internet. We
Right?
have that. In 1986, we had catalogs with houses in them. And if you wanted to find out about houses, you would come into the office, we'd open up the book, and we talk about the properties that are in there. So when the internet came, of course, that was a huge change, making all of that available out there to consumers, which was great. But it was scary because we didn't know.
Right.
So it was one of those big, big changes that we didn't know. So there was a lot of kind of upsetness in the industry at that time. Turned out to be okay. I think another big one was the electronic signatures, no more mailing things or driving to somebody's proper house to get signatures, but, within seconds you could have electronic signatures. So that really sped up a lot of processes. What has stayed the same, I would say, it's still a people business. I would have so many people that would talk about getting into the business and they would say, "Oh, I just love houses." And I would say, "Well, you better love people because it really is a people business." And, that hasn't changed. It's a very important interaction that you have with folks for, weeks at a time, months at a time. And so the experience and the skills that you need to come alongside somebody and be an important part of their transition and transaction hasn't changed.
Cool. Yeah. So based on what you said earlier about the technology changing with regard to like the internet and obviously email, electronic signatures, just out of curiosity, like what was an average closing time period in 1986 when you first started helping clients buy and sell homes? Like what would be like from contract, mutual acceptance to closing, what was an average timeline?
I don't recall, but I think it must have been different. I think it must have been longer. I think it was probably could have been at least 45 days.
Right.
By the
Yeah.
time you shuffled around to get signatures and get everything done. Now back then, the contract was much shorter. It was, one page legal size.
Yeah.
So there were less contingencies, less disclosures, that sort of thing. But I think with the lending piece of it, it would still probably take about 45 days.
Yeah. Yeah.
And, I feel like it has sped up to more like a 30-day closing
Oh, I think even sub 30 day. I mean, when
or
I hear
sub
30
30.
days now, I'm like, gosh, that's an eternity. That sounds good. I remember I got in the business in April of 2002. And at that particular time, obviously that was sort of during the time when things were migrating from, tangible files to digital files. And I remember getting appraisals that still had the photos glued into their appraisal report as opposed to
Yes.
embedded, in the image. Or I also remember driving all over Lake Oswego, looking for wholesale, banks to drop files off to or drop conditions off. And of course, now anymore, like that's all sent with encrypted secure email and all that jazz. So it's definitely
Yeah.
a different deal. What I really like what you said though is about the people business. And one of the things I really admire about a really good professional realtor, obviously the competency and technical skill and all that is important, the expertise that you bring about, houses and inspections and negotiating all that. But for a household or a family or a person that's buying a home to house themselves, that is a highly emotional process. I would argue you guys are emotional therapists as much as you are technicians. Would you agree? How would you respond to that?
Yeah, yeah, it is very emotional, and a lot of buyers, especially and sellers, don't understand how emotional it's going to get. Even if they've done it, it was probably 7, 10 years before, and they've forgotten all of that, and then it kind of stirs up a lot of things for people. So that's why it's so important that we are the professionals. We are kind of the rock. We don't get caught up in that. We help guide them and tell them what's ahead. What's the next step? What's it going to look like? Is it going to be a little bumpy, or is it going to be, I love your analogy about, being on the plane and,
Yeah,
the pilot advising us, hey, we're going to have a little turbulence. So that's who we are. And it's very important to not get caught up in their emotions, but just to be very, strong and straightforward and help them get from, point A to point B
yeah.
safely.
Well, it's so interesting because I'd say one of the biggest lessons that I've learned in my 20 years of doing what I do is that we make decisions emotionally, and this I think will be a primary topic for what we're going to talk about next in terms of your involvement with YNAB and helping realtors, get control of their financial lives. But as much as we try to rationalize our decision making, especially around money or business decisions or home purchases, because it's a large sum of money, it's still a very highly emotional process, and very few people are able to block that out and just make purely rational decisions. So it's a difficult job, and I think helping people navigate that is a true skill. And there's a lot of value there, right? As we talk about value propositions and how realtors can demonstrate their role in the process, I think
Oh,
that's a
that's
big
such a
one,
good one. Yeah.
for sure, for sure.
Hmm. Yeah.
Um, okay, cool. So, if you were going to give advice to a new realtor getting into the business today, what are one, two, three things that you would advise for them to prepare to have a successful time in their career?
Oh, wow. Well, I think really lean into education. Just getting a license isn't enough. I was in a class yesterday and we were all kind of joking about, it's a license. It's not your education. It's not a skill builder. It's just a license. And I don't know what it takes these days, 60 hours or something, but it's not very much. So lean into education, lean into maybe certifications or credentials, that you
Mhm.
could add to that.
Professional development.
Professional development, certified residential specialist right now is the accredited buyer representation specialist, which the National Association of Realtors is actually providing for free. It's typically $240 for that course. Beautiful course. There's negotiation expert. I mean, there's all kinds of things. So if you go to National Association of Realtors, you can see all the different credentials you can get, or just keep your eyes and ears open for, education, professional development opportunities. You don't want to get lost in that. I mean, you still want to be able to do business, but do build in, time every week for that and make that part of your job. Um, the other, I would say, and we'll get into this, is definitely the financial piece of it. And you want to have a solid plan of what that looks like, because, this isn't, W-2 income anymore. It's, compensation driven, commission driven. It is not as consistent as you might be used to in another job. And, so how do you deal with that? How do you deal with the idea that you get a commission check? Is that your paycheck? No. And so, how can you set yourself up for success? Because I do hear that a lot of folks that can't or don't make it in real estate it was because of the financial piece of it. It wasn't maybe that they didn't have enough sales, but once they had that money, how to handle that in such a way that it could be a sustainable business. They could take care of the business and they could take care of themselves and their family.
Yeah, I love that piece, and that's absolutely what we're gonna get into today. So listen, if you're a new real estate professional, or maybe you're an experienced real estate professional, but feel like you're starting the process over each year, uh, professional development, education, credentials, that is going to be so important as we move forward in the new world after this NAR settlement, because listen, the whole name of the game is to be able to communicate your value, to demonstrate for your buyers and sellers why you have a role in the process of buying and selling real estate. And accreditation or education, if you have the little initials behind your name, that demonstrates to a buyer that you actually have been educated in that. So I love that. And then the transition away from having maybe a more regular paycheck, a salary or wages or whatever that you're used to getting on a very, very consistent basis. Now your income is going to do this. And I'd say, I've been in my business for 21 years, and it's still that way, right? So you still have to
Yeah.
be able to manage and understand basic cash flow management. And so that's what we're going to get into here. So let's talk about that, Denny. This episode was crafted based on a conversation that you and I had. And for those of you who aren't familiar with my background, I'm a certified financial planner, and I try to wrap that competency into a traditional mortgage process. And it's my belief that a household really can't make an educated, informed, prudent decision around how they finance a home purchase without it affecting everything else in their financial life. And so in my judgment, it's beholden upon a professional to help educate consumers around that. And through that, I have created kind of a what I call financial planning light process, the four pillars of financial well-being. And pillar one is for a household to evaluate their cash flow, budgeting, some people call it. And this is by far the most cumbersome part of the process, for sure. It's also in many cases the most critical, because ultimately what we're talking about is a household taking some of their income and setting it aside and giving it a job for the future. In many cases, that hopefully is going to be, eventually we want to increase the proportion of that income that you're setting aside for the future, investing and letting that work for you. And you had reached out to me and said, hey, let's talk. Are you familiar with YNAB? So Diana, tell us about your background with YNAB and how you got involved in that product.
Sure, sure. But just before that, I really like what you're saying about, your involvement and your ability to assist home buyers in your, that you care about what their budget might look like. Because I would say that when I was working with buyers as an agent, I would say, look, you're going to qualify for something, but your budget may say something else. So it's very, very important, no matter what the lender has told you, no matter what that pre-qualification or pre-approval letter has told you, they don't know. They don't know what you want to give away. They don't know what you want your vacations to look like. They don't know your lifestyle and what is important to you. So you be sure that that house payment fits in your budget.
Yeah.
And wherever that fits, then let's match that up to the price you should be looking at. Because a lender may tell you one thing, but your budget may tell you something else.
In almost every case, that's true, Diana. A lender is going to be able to approve a customer for a monthly payment that is substantially more than what would be a prudent payment for that house. Now, there's exceptions to that, but generally speaking, that's almost always the case. So yeah, thank you for
Yeah.
clarifying that.
Yeah. But for me, starting what I did in real estate, I was told it's feast or famine. You'll have some income and then you won't. I was told, shovel some into the valleys when you're up on the hill. I was told a lot of things, about what this business is like. I was never taught to budget. And so I went for decades doing what most of us do. That's, glad when the commissions are coming in, a little nervous when they're not, hoping I had built up enough of a reserve to handle some of those low times, and watching the bank balance. Is it a both home bank balance and business bank balance? So this is the assumption that you've separated the two. And that went on for years. I mean, I supported a family. I put kids through college. I did, I've done all kinds of things financially, and it all looked okay. But on the inside, it was, it was, it wasn't easy, and I didn't have a lot of peace of mind about it. And I did not have a lot of confidence about it. I had a lot of, let's hope and pray this works out.
Sure.
Uh, and during the big recession, I mean, thank goodness I was in coaching with Brian Buffini all those years. And at least Brian did teach us, this is coming, this recession is coming, build your reserves, build, build, build. So at least I had, something that I was able to put away, some extra that did get us through those first few years of that great recession. So that was helpful. But it was 2019. So it's just a few years ago. I just knew that I was always looking for something, but I just didn't know where it was. So I came across a financial coach, and she sat me down, and I had a pretty good amount of debt at the time. I was used to that. I was kind of comfortable with that. People can be comfortable with carrying debt.
Mhm.
I was okay with it. And as long as that bank balance was okay, I was okay with carrying some debt. But we sat down. I said, I don't want this debt thing anymore. And I want something that feels I'm more confident, I'm in control, and I want to get ahead, not only out of debt, but I want to get ahead. So we sat down, and she put me on this program called YNAB. You Need a Budget. YNAB is the way it's pronounced.
Mhm.
And we started working on that. We put all of my information in there, and I would meet with her once a week. It only took about 4 weeks, and I was able to get going with it. Within about 6 months, I was able to have a good plan in place to get out of debt. Now I was able to really see what was going on with my dollars, giving each dollar a job, working that plan, having a contingency if I needed to kind of roll with the punches, as they call it. And even with that, even with a little movement in, some changes here and there, I was able to get out of that debt and actually start getting ahead. I was able to stabilize my income. Now, I've always been a S corp
Mhm.
anyway, a
Yep.
corporation.
Yep.
So, I set myself up as an employee of the business, of the real estate business, pay myself a paycheck, but I cheated a lot
Sure.
before I had this system. I would cheat. I would pull what you call owner draws or distributions, and oh, I need a little more, or something like that. So I was kind of playing that game. Um, so first I got my home set up and stabilized. Then I thought, this is really cool. I think this could work for business. And it did. And
Wow.
it just changed my world for the real estate business. I knew exactly where every dollar was going to go. This is not forecasting, by the way. This is working with the dollars you have, and that's it. And then when new dollars come in, you assign those. So I had a reality check. I could make decisions when COVID hit. I could make decisions, based on what I knew, the clarity I had about my business. I could sleep at night. I mean, it was an amazing tool to have when that next, sort of recession or difficult time came along. Um, then I thought, well, this is cool. We used it for our wedding. We used it for our Hawaiian vacation. We used it for developing a plan to purchase rental property. And, you helped us almost 2 years ago now buy a really beautiful rental property, a nice bungalow with an ADU. And that, I say we, my husband and I got married about 3 years ago, and he didn't know anything about this. And so he's actually now paying me to do this. We decided that I get a raise in the family because I'm the one that manages this.
Well, yeah,
And he's
absolutely.
so grateful.
That seems fair to me.
Yeah, he's so grateful. So Yeah, so that's, that's what it's done, and I'm excited to share it. I've never really, I've done some one-on-one coaching with just a few people, but I've never done a webinar. But YNAB has now made that easy. They've given us some slides and a way to be able to share it with people to, give them a good overview and an understanding of what this can do for them. And, you don't have to use the app. You don't have to use YNAB. You can just kind of get the concept of it and do your own spreadsheet. So it's not really selling the program, although nobody does it like YNAB. I used
Right.
to use Mint.
Yep.
I used something that Dave Ramsey had. I mean, I feel like I had tried everything, and there is nothing like YNAB out there to give you the clarity, the control, and the confidence like this.
Well, I literally was going to say that because I mean I've known you for a number of years just in the industry. I've had the good fortune and honor of assisting Michael and you personally. And obviously like before all that, we never talked finances. Obviously, it was normal industry, but like knowing you now, Diana, you convey a high level of confidence in this. Like the times we've talked about this, I can just feel that
Mm.
you have this high level of control and certainty and confidence in your household money, which I would argue is probably most people who are going to take the time to watch this would say, gosh, I wish I had that. And so the fact that you're bringing this to the real estate community and through PMAR is a phenomenal resource. So let me first plug that, because if you are a member of PMAR, Diana is going to be holding a webinar on May 1st from 10 to 11 a.m. It's called Money Made Simple, Stress Less, Save More. And you're going to be focusing on how realtors can use the principles of YNAB to get their financial life in order, correct?
Yeah, it'll be an overview really for anybody.
Yep.
I think realtors will be, they'll recognize, gee, I could use this for home and I could use it for business.
Mm-hmm.
And one more thing about business is I was also able to look at this 1 year ago when this opportunity came up at PMAR, and I had to do a really fast pivot from being an active agent of 37 years to now being a staff member at PMAR. And
Mm-hmm.
I love that I could do that. I love that I could turn on a dime like that because I knew exactly what my finances were. And so that helped me transition just within a matter of a couple of months from full active to referral only, and to see a plan, on how I could make that work. Because being here at PMAR, I still need to have that a little bit more income coming in because Michael, my husband, and I, still have some financial goals that we want to meet. So I want that referral income.
Mm-hmm.
And so I still run my referral business on YNAB and can see, exactly how things are.
So let's dive in and talk just a little bit about. I'm not going to go too far into the details here, but let's, for those who aren't familiar with YNAB, you need a budget. It's based on what has been in the past referred to as the envelope method. So before spreadsheets, before computer, before digital, one of the budgeting tactics that a household would take is at the beginning of each month, they would literally get an envelope, and they in each envelope, which would represent a spending category. So let's say it's rent or mortgage payment, let's say it's debt payments, groceries, clothing, yada yada yada. There would literally be an envelope, and inside that envelope a household would plug in the amount of cash that they were allocating for that spending category for that month. And then as they went out and bought groceries or went out to eat or got coffee or did whatever they were doing, they would use money from that envelope to pay for that spending. And then, listen, once the envelope's open, they could no longer do that activity because they didn't have any money left in the month. So it's defining how much, or budgeting how much you plan on spending in different categories of your life. What YNAB did is they took it and they built out an application that is very robust, and households can use that to effectively apply the envelope method. So let's talk about the rules, Diana. Rule one in YNAB is giving every dollar a job. Can you expand on that? What does that mean for people who are interested in potentially looking at YNAB as a solution?
Yeah, well, if you think about the envelope method, first you have to start with a pile or whatever of cash to put into those envelopes.
Mm-hmm.
So that's what you have to assign. So it's whatever, you got your paycheck, pretend it's all, just a pile of dollars in front of you. That's your paycheck. You cashed it.
Yep.
Your future paycheck, it's the one you just got.
Right.
So now you're putting all of those dollars into envelopes. So that's giving every dollar a job.
Right.
You decide what those jobs are. They're based on your priorities, based on your value system. It's totally up to you. Now, you may want to keep the lights on, and keep your mortgage paid. Some things are not going to be negotiable, but then there are a lot of things that are. There are things that are important to me and my husband that may not be important to you. Um, and the thing about the envelope system, if you can imagine that, okay, you took your grocery money and you went, you bought groceries, but you wanted to get an extra, you need to get a birthday cake or something. And so now you spent maybe an extra $20. Well, you can go back home and you could look at your other envelopes and go, well, it's a trade-off. I'm going to pull $20 out of our eating out money, or I'm going to pull $20 from something else. And that's what YNAB does. It does all that accounting for you. Now, you don't want to do a whole lot of trade-offs, but you can, and it gives you that kind of flexibility.
Mm-hmm.
But you've got your envelopes all set and you know exactly what you've got.
Right. Because otherwise, without that, then you're just going to be anecdotal or willy-nilly with it, right? You're just going to say yes or no and not really know where that leaves you at the end of the month.
Yeah, what most people do regarding rule one is, they don't give every dollar a job. And like I would go to the grocery store and go, can I afford to spend $200 this week? And I'd look at my bank balance and I go, well, I think I can. I think so.
Mm-hmm.
I think I'll still be able to pay the electric bill and, I think so. So that's what rule one is for, is you give every dollar a job. There's no more guessing or looking at the bank balance to wonder about it.
Okay. Yeah. So rule number one, giving every dollar a job, assigning your money, budgeting your money. Rule number two, embrace your true expenses. What does
Mm.
that mean for households?
This was the game changer. This was it.
Okay.
Um, a true expense, a good example is a car repair. You know it's going to happen,
Mm-hmm.
but you don't know when or how much it's
Right.
going to be. So one of those envelopes can be a future car repair. And you could say, I don't know, I don't know, last time I had a car repair, it was $500. So some of it's guesswork, and that's fine.
Sure.
And you think, well, will I have a car repair in the next year? Maybe. Is it important to me to be able to address that? Yeah. Or am I just going to wait and then it's an emergency?
Right.
Does that money come from? Well, a lot of times it goes on a credit card. So I want to avoid that. I want to feel like I can have confidence that if there's a car repair, I've got it. It's taken care of. And this is different than an emergency fund. I know Dave Ramsey really talks about the emergency fund, break glass. This is not a break glass system. This is, it's real. You really are going to have a car repair. You
You're
really
acknowledging
have
it.
to replace tires at some point.
Right.
You're really going to have to put a new roof on your house at some point if you own. There are a lot of things, and you figure these out along the way. They sort of are revealed to you along the way. You go, oh, that is a true expense. So then you take the 500 and divide it by 12 if you want to take a year to build up that, or 18 months or whatever. And then you set that bit of money aside every month to go into that envelope. So when that car repair does come up, you can go, yep, I got the envelope right here. Now, maybe that car repair turns out to be $600, but then you can go back to your other envelopes and go, well, maybe I could get 50 from here and 50 from there. And you kind of, work it like that. But
Yeah.
that's a true expense. Holidays are a true expense. For us, we celebrate Christmas. So we've got that on there. I have vacations are a true expense for us. That's important to us. So we
Sure.
put aside a certain amount every month to build up for vacation. So that's the idea of true expenses.
And it sounds like, I mean, these are expenditures that households make that are less consistent, right? Maybe it's done
Yeah.
annually, maybe it's done every 10 years, maybe it's done every 20 years. But the point is they exist. And to ignore them is a disservice. It means that when that expense arises, by the way, those that typically happen on those are larger amounts, right? I mean, we're not talking, penny change here.
It
These
can
are
be
large
big.
things a person should be saving for. One,
Hmm.
one of the ideas I've always wanted to try, and if Freakonomics, if you ever find this podcast, let's try this. But I think it's interesting that if a person owns a home and has a mortgage, they get a mortgage statement in the mail every single month. And for a lot of households, like that's a priority, right? People aren't going to skip on the mortgage. They don't want to fall behind on the mortgage and fall into foreclosure and lose that, right? But I would argue that we all have a similar level of obligation to ourselves towards retirement, right? We should all be setting aside money now so that we don't have to work into our 70s, 80s, and 90s. I mean, right? That's a basic concept. Well, I would love it if my financial manager who manages my retirement funds would send me a statement each and every month to show this is how much you're deficient. This is how much you have to be saving to meet that goal in the future. This is how much you have to pay off your retirement. Because it's very conspicuous when we get our mortgage statement. We see the balance, we see the payment, we see the interest rate. We all know we need to save for retirement, but it's not tangible, right? So I would talk about like embracing your expenses. Your future retirement, that's an expense.
Future
It's out
expense.
there. You
Yeah,
don't see it, it's not tangible. But bottom
yeah.
line is YNAB helps make those things tangible and acknowledging the fact that I have an obligation and commitment to set money aside for that future expense.
Yeah, we literally did that. We did figure out, my husband was able to figure it out, where we stand and what our deficiency is, or what's needed, on a monthly basis to apply towards, future retirement. And that's in there.
Yep.
That's one of our true expenses.
Love
Yeah.
it. Well, when I
Mhm.
get the statement business worked out, I'll send you guys a statement and you and Michael could pay,
Yeah.
pay yourselves. Okay, we got rule one, give every dollar a job. Rule two, embrace your expenses, your true expenses. Rule number three is roll with the punches. What does that mean?
I love this one. This is the one where, your car expense, your repair is, you thought maybe be 500, or you plan for 500, but it's 600. So that's a little bit of a punch.
Yep.
And you can go to your other envelopes, especially as you get into this, you can go into the other envelopes and go, well, maybe we're not going to eat out as much this month, or, maybe I was saving up for a new phone. I'll put the new phone off for another month or two and I'll take it from there. It's a lot of fun. It's almost a game because you're able to go to all these envelopes and instantly make a decision on what that priority is to you.
Mm-hmm.
Do I have to have the new phone, or, could I put that off for a couple of months?
Yeah.
And you feel so confident about it.
Yeah.
So, I could be out shopping for a gift, and, in my gift allocation, I only have, $25, but I see something I know my sister is going to love, 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 and it's 35.
Mm-hmm.
So that's fine. Okay, I'll get it for 35 because I know I could go back and get 10 from somewhere else. So that's, or things that are unexpected. You can roll with it because you can go look at your envelopes, all your categories, and help soften the blow, soften the punch
Yeah.
by doing that.
Well, I think budgeting generally carries this reputation that it's very rigid and structured and unflexible. And the reality is life doesn't work that way.
Right.
So this is a way to sort of provide that structure, provide the benefits of that without losing the ability to remain consistent. So I think it's a critical part of it for sure, because life doesn't happen. We can't predict life into the future.
Right.
Okay, rule four, age your money. Expand on that one.
Yeah, this one is probably the least understood, but when you have a dollar come into your, let's say it's that envelope, uh, or your bank account. When you have a dollar come in and it goes out the next day, it's just a baby. It's only been there one day. The goal is to not only have money for what you need this month, but have money for what you need next month.
Yeah.
Because most people have a stack of bills ready. Here's the electric, the gas, the water, the mortgage, They've got a stack of bill, the car payment, the student loan payment, they've got a stack of bills ready, and they're just waiting for the money to come in. And as soon as the money comes in, it goes out. And what YNAB will help you do is actually get ahead of that. The money will come in and it doesn't have to do anything because these bills were already taken care of by last month's money. And so now that money gets to sit there. And that's a little bit of a kind of a fun game too, because the longer you get the money to sit there, the higher score you get. So you can get 30 days of aged money or 60 days of aged money or 4 days. I mean, even 2 days is, you start out, with just a few days and you grow it and you watch that and you go, wow, I paid all my bills with a paycheck from 2 weeks ago. And I don't have a stack of things waiting now for the next paycheck. The next paycheck's going to come in, and that's actually going to be sitting there because those bills aren't even due until next month. So this is how you get out of the paycheck to paycheck cycle.
Yeah, well, talk about security, right? And so in the four pillars model, pillar three is building the financial cushion, and we actually work towards having the household identify here's your needs, right? Your housing, your food, your transportation, your debt payments, and we quantify that on a monthly basis. And then depending on your risk tolerance, your type of income, and all those things, we recommend having between 3 and 12 months worth of that amount saved up. And so it's similar in that, right? What you're saying is you guys keep score on a daily basis, whereas we track on a monthly basis. But I mean, that is security. That is financial security, knowing that you can go out in the world today and if you lose your job, if you have an injury or an illness or something, you have this number of months of living expenses saved up, and you'll be able to get back on your feet. And so that's that is the goal, right?
Well,
Is
it turns out, yeah, to your point, a true emergency fund in this system, when you get into it, the true emergency fund is really what if there's a job loss?
Mhm.
It's not the car repair. It's not even the doctor appointment because you can
Right.
also, set up, I mean, we set up, for out-of-pocket doctor expenses. We've got a little going into that envelope every month,
Sure.
prescriptions, all of that sort of thing. So when you get to a point that really the only true emergency would be if there's a job loss.
Yeah.
And okay, well, if that happens, we can float for 3 months,
Right.
and what are the chances of getting a job in 3 months? Pretty good.
Right.
Oh, we can sleep at night.
Right. Right.
Yeah. Hmm.
Diana, talk about the time commitment, because I think one of the things, I mean, I would imagine there's a lot of inertia to get into this system, into the YNAB system. But
Yeah.
now that you and Michael have been in it for a number of years, how much time does it take you to maintain it?
Right now, I would say I like to look at it every 2 weeks for sure. Once a week is ideal to stay
Hmm.
on top of it, but I would say every 2 weeks. I do it around the 15th and then the 30th of the month
Okay.
to make sure the month is kind of reconciled. And then on the first, we sort of start over again.
Yeah.
So
Okay.
I'd say 15 to 20 minutes
A
each
week?
time I'm in there. Yeah.
I mean, that
Yeah,
is such
15 minutes a week,
that
maybe.
that is such a low investment of time to
Oh
have
yeah.
the level of security and confidence that I said earlier you're conveying. So I love that.
Yeah. Now in the beginning, you'll want to spend a little bit more time and you're going to want to keep it simple. Like when I first did it, so I had to go through a whole paradigm shift and
Hmm.
everybody will,
Right.
because we're used to forecasting.
Right.
We're used to thinking, well, I'm getting a paycheck on the 15th and it's going to take care of all of these things. Let me write down what it's going to take care of. And
Right.
that's not what this is. And it took me a while. I could feel my brain, trying to wrap around this. And finally I made the shift. Um, so I don't know what else I wanted to say about that, other than it's different.
Yeah. Yeah.
Mhm. Oh, I know what. In the beginning, yeah, it took a little bit more time, but my coach said, just deal with what it is you need to squeak by. She gave me three categories: squeak by, um, nice to have, or something else. And so I just dealt with squeak by. What
Right.
do I need? I need to pay the mortgage. I need gas in my car. I need food. I need electricity. And so I just did that.
Yep.
And I remember the feeling I had one day, and I know exactly where I was. I was driving over the Hawthorne Bridge. It's weird. And it just had this insight that was like, I'm okay. I've got what it takes to squeak by. I'm okay.
Yeah,
And
that's
that was
awesome.
such a relief. And then I built from there.
Yeah. Well,
Yeah.
and I also want to point out there are coaches and consultants that you can hire. I'm aware of a local business that you can hire that helps households get up and running in YNAB, and then you can kind of maintain it from there. Um,
Yeah, and also YNAB has hundreds of videos. They have
yeah,
live workshops. They have the best customer service. You can type them a question, they'll get back to you within 24 hours. It's very, very user friendly. Lots and lots and lots of support. There's a great podcast that Jesse Meekum does. He originally invented it, and he does one for business now called I want to say The Bottom Line, but I don't think that's it, but podcasts as well.
got it. Well, Diana, thank you so much for taking the time to be with us today. And listen, if you're watching this conversation and you want to convey the level of confidence and clarity that Diana conveys when it comes to her household finances, first step for you is sign up for the webinar she's going to be offering, which is May 1st from 10 to 11 a.m. You can sign up on the PMAR website. If you want to reach out to Diana, how do people get a hold of you?
Well, I do want to say on the PMAR website, that is for members only.
Yes.
And so if they would like to either join that, or maybe I'll do another one at another time for non-members, best way to reach me would be, I suppose my email, which is dcolin, COLIN at pmar.org. That's probably the best way, that email.
And I will be hosting two webinars in April, tax season. So many people have money on their minds. Friday, April 19th and Thursday, April 25th, I will be doing webinars on my 4 pillars of financial well-being. I invite you to that. We'll put links to both those events in the summary below. So Diana, thank you so much for joining us today. Thank you for your 37 years of service to the industry. And now, in your role at PMAR, I've heard nothing but glowing remarks about the
Oh,
education and development that you're bringing to PMAR members. So keep up the good work. You are elevating the industry and making a lot of positive change. So well done.
wow. Well, thank you, Evan. Thanks for this opportunity. It's been great.
Awesome. Thank you so much.